Good morning, I'm James Lopez, President at HomeFi Corporation, and this is today's market update. Now, first of all, stocks are up higher, sharply higher this morning, on expectation from news from the Fed chair and everything that's going on with the FOMC meeting that wraps up today. Now that lift in the stocks comes at the expense of bonds and treasuries, as you might have guessed. Mortgage bonds are down about 21 basis points, and treasuries are hitting multi-year highs on their yield. So kind of erased all the gains that we had yesterday that we saw. What that means for mortgage rates is that mortgage rates are likely to open up a little bit higher this morning. And then depending on the news throughout the day and how the markets kind of assimilate the news throughout the day from the Fed chair, there could be some reactions. But we expect that most of the reaction is already baked into market prices. Now, we are expecting from the Fed chair announcement, everybody's been talking about it so far this week, a 25 basis point hike. What we're expecting is to see 5 25 basis point hikes throughout the year. The first one's coming in March, May, and June. So as that news kind of gets, like I said, assimilated into the market, we'll see how the markets respond to that. And we'll probably talk a little bit more about that tomorrow in tomorrow's update. In other news, Mortgage Bankers Association released their application data, their weekly application data that release every week on Wednesday. Applications last week fell by 1.2%. That's new applications, purchase and refinance, after increasing the previous week by 8%. So we saw a little bit of a pullback on new applications from the Mortgage Bankers Association. We'll dig into that a little bit more and have some more to report on that tomorrow as we kind of dissect that report. Now, everybody's been talking about home equity rising, right? The state of Florida saw $76,000 in home equity increases for homeowners. Nationally, the home equity increase was about $55,300 for homeowners. But one thing that's happening also is that rental rates are increasing as well. Now, CoreLogic released their rental rate data for year-over-year rate increases. And what we're seeing is rent price increases accelerating. And so what I mean by that is that in December, the rental rate increase was about 12%. In January, the rental rate increase was 12.6%. So those rental rate increases are accelerating. They're getting faster. And that data includes new rentals and renewals. So it's kind of a blended data. That's why there's a little bit of a disparity between the CoreLogic data and what we saw from Apartment List that showed an 18% rent increase. Now, what's interesting about some of this data, if you kind of dig into this data, is that if you want to move to where it's hot, you want to go down to Miami, Miami saw a 38.6% increase in rental rates year over year. Orlando was at about 19%. Those two cities led the way in the nation as far as rental rate increases. So if you're coming to Florida, you may want to buy. It's a little bit more expensive to rent right now. Now that's all the news that we have today. We're going to be following the Fed chair press conference and getting news out about that as it happens and as the market, like I said, kind of dissects and assimilates the data. If we have any news to report throughout the day, we'll send it out to you. And listen, be sure to go to our YouTube channel, HomeFi on YouTube. Like us, comment. If you have a question, leave a comment there. Subscribe to our YouTube channel. Share it with your friends. And then go over to Facebook and like our page on Facebook. And we send out data and updates on that page as well. It's facebook.com/homefi.us. Hope you have a great day, and we'll see you tomorrow.